I'm sure many of you guys have likely witnessed the Chinese robots doing all kind of crazy things on the Chinese New Year. It's scary, but it's also innovative at the same time. And you have the CEO of NVIDIA, Jensen Huang, saying the next frontier is physical AI. This is the final and this is the last stage of AI. We've been training the models. We did a lot of things within training them. Now is the time to apply those models to real life applications through robotics, through automation. And this is the next phase of AI. And I'm sure many of us are looking for ways to bet on it. Some people believe Tesla has the best humanoids in the United States, and this is the best way to bet on it. I think it could be an amazing bet, but I have a different bet. It's under the radar. No one pretty much talks about the stock on X or on YouTube or anywhere. So I'm going to talk about the stock again and give you an update. And I really hope you enjoyed it as always. This stock is Ouster, ticker symbol OUST. The stock is up 19% on earnings, but it's still down massively year to date from $35. It was the all-time high, and it's been punished, unfairly punished, with a lot of growth stocks. Even though the company has been delivering, it continued on delivering, but the stock has been going down and it's still under pressure. Now, Ouster is mainly a LiDAR company in the United States. So maybe you've seen a lot of robots like Serve Robotics, which delivers food to people's doors in San Francisco and all kind of cities. You see this little LiDAR sensor. This is an Ouster LiDAR sensor. Amazon uses LiDAR sensors for their robotics in their own factories. Anduril uses Ouster LiDAR sensors for defense applications. And those LiDAR sensors are used for many different applications. I'm trying to keep the video short, but my favorite part of Ouster is smart infrastructure. And they put those sensors as traffic monitoring systems in a lot of cities. Here in the United States, we have really old traffic monitoring systems from like 90s and the 80s, and they're changing them to LiDAR-based systems, and Ouster's LiDAR systems are the most popular in smart infrastructure. Once they install it, they have to pay Ouster recurring revenue in terms of software. So this is not just a hardware company, but it's also a software company, as a lot of those municipalities, they need the software to be able to monitor the traffic. And this is massive for the company, and it's going to make it less cyclical over time with much higher margins. Now, very recently, the company has made a game-changing acquisition of Stereolabs, and Stereolabs will expand Ouster not just in LiDAR, but also in cameras. And a lot of the humanoids, such as the one you see in this image, they don't use expensive LiDAR sensors. They don't need them. They mainly use cameras. So this is going to massively expand the TAM of Ouster. It can be absolutely crazy. And there has been a lot of debates from Tesla shareholders and other shareholders if LiDAR is the best one or if camera is the best one. Well, Ouster is now a bet on both. It's the ultimate physical AI bet, from LiDAR to sensors to software, and even training AI models to do certain things and sense certain things and with the software. So again, the company has really transformed after the acquisition. It's really amazing. They're going to have access to over 10,000 new customers. Ouster currently has like 10 or 12 customers, and most of them are big, like Amazon. Google Maps uses them, Anduril uses them, Serve Robotics is the biggest customer, and they have a few other customers. But they're going to have access to 10,000 new customers, which going to expand their TAM. They only paid $35 million for the acquisition and 1.8 million in shares. I believe personally it was a steal. Now, looking at the latest earnings report for the company, it was amazing. They grew 107% in revenues and 57% quarter on quarter. Now, it's worth mentioning that a lot of the revenues that contributed to 107% was due to royalties of 21 million, which was mainly like a one-time kind of event. It's not going to be happening every quarter. They mentioned that they did book some royalties for the next few quarters, but this is not going to be something on a consistent basis. So for you to look at the core business, the main business, you have to look at product revenue, which was 41 million, or up 36% year on year and 4% quarter on quarter. So even the core business without royalties, it's still pretty amazing. GAAP margins has expanded to 60%, 60% GAAP margins, and this is the first quarterly profitability for the company of 4 million. really, really amazing. And the company has been sequentially growing in revenues every single quarter from 2021 to right now, December of 2025. It's been really beautiful to look at. You look at the gross profit margin, it has reached 60%. Before the royalties, it was 40 to 45%. And this is an amazing testament that Ouster doesn't have as much competition as a lot of people believe. Many people told me when I talked about the stock that this is a competitive space. Anyone has LiDAR sensors. A lot of company had those things, and they can just compete with Ouster's, and Ouster has no moat, it has no competitive advantage. And I disagreed because a lot of those companies like AEVA, Luminar, which has gone bankrupt, and Innoviz and a lot of others, they mainly compete in automotive LiDAR. Automotive LiDAR requires a different technology from industrial LiDAR and robotics LiDAR, where Ouster has a massive competitive advantage and a massive lead. And this is why Ouster's gross profit margins are much higher than Innoviz, almost triple Innoviz gross profit margins, and AEVA is still negative gross profit margins. So there's no competition that has anywhere close to 40-45% gross margins. And this is a testament to Ouster that it actually has an edge. It has a, you'd say, technological moat, and it's not just a company that's facing the race to the bottom in gross margins. Now, the main competitions that we have to worry about with Ouster is the Chinese players, because the Chinese players like Hesai and others, they have very cheap LiDAR. Now, as of September of 2025, Hesai lost a lawsuit from the US government, from the Pentagon, and the Pentagon, they put it on the list of firms that are pretty much blacklisted because they believe the Chinese LiDAR player Hesai works with the Chinese military and it contributes to the Chinese industrial base. So a company like Hesai, which has very cheap and affordable LiDAR sensors, much cheaper than Ouster, it cannot be used for Anduril drones, it cannot be used for defense applications, and it cannot be used for critical infrastructure like the traffic monitoring systems that Ouster plays in the United States. So if there was a lot of competition from China, the gross profit margins of Ouster would not be 40%, they'd be maybe 10, 15, 20%. But due to national security concerns, they're not going to allow the Chinese players to be playing in defense contracts or mainly in critical infrastructure. Now, there's another call option on Ouster's gross profit margins, and this is a recent bill that was introduced just a few months ago. It was in December 15 of 2025, and this lawmaker has proposed phasing out Chinese-made sensors in self-driving cars and critical infrastructure due to warnings they could be hacked and disabled from space during a conflict, crippling vast US systems in seconds. And that's again from a Democrat, the opposite party, and this is a bipartisan issue. So now the Chinese LiDAR players are still being implemented in self-driving cars and in other kind of matters because they're really, really cheap, and it makes it very profitable for the self-driving car to be using Hesai and other kind of LiDAR. Now, if they do phase them out and they cannot be used in the United States for anything, that would be a massive, massive boost for Ouster's business and gross profit margins in general. It would pretty much eliminate competition, and Ouster is the largest US-made, US manufacturer of sensors and LiDAR for Fiscal.AI. So it would be really, really amazing. Now, it's worth mentioning that the company is unprofitable. This quarter, it was profitable, but again, due to the royalties, which are not going to happen every single quarter, without it, Ouster was still unprofitable, but it has been improving in losses every single quarter sequentially, as you could see here, and it's expected to be profitable by Q1 of 2027. And because the company was unprofitable, share dilution has been a major, major concern. Shares have been increasing about 2 million shares every single quarter, which was over a 20% year-on-year dilution. This is the biggest mistake. This is the biggest problem with the stock. This is the part that I don't really like about it, but I know that this is an early stage company and they were unprofitable. They had to fund their growth, and very recently again they were profitable, and shares outstanding did increase by about 2 million, but 1.8 million out of them was to fund the Stereolabs acquisition of the cameras that I showed you. So if it wasn't for that, and Ouster was profitable, shares outstanding would have been pretty much flat quarter on quarter. So that would really tell me that once Ouster turns profitable, share dilution is going to decrease in a major way. But the reason why they've been also diluting shares is to raise cash and to have a fortress balance sheet of 244 million of cash and no debt, because they want to show Amazon, they want to show Anduril, they want to show their customers that they have a good balance sheet and not gonna go to zero like what happened to LAZR, which is Luminar Technologies. You could look at the stock, it went to zero. They had a lot of debts, they couldn't repay the debt, and they defaulted on their obligations with Volkswagen and other kind of players. And Ouster wants to be a reliable partner, which is why they have diluted a lot of stock. And this remains the biggest issue with the stock, and it should get better over time. And by the way, I'm using Fiscal.AI to come up with all those charts. If you'd like to try it out, it's give you 2 weeks of free access if you use my link in the description. Now, in terms of the valuation, it's unprofitable again, so I'm using price to sales. It's trading at 5 times price to sales. I don't believe 5 times is expensive for a company that's been growing and it's still guiding for the long term, meaning for the next 5 to 10 years, 30 to 50% annual revenue growth, 35 to 40% gross profit margin, and it should be profitable by Q1 of 2027. So 30 to 50% growth for such a company that's in the beginning, in the early innings of industrial LiDAR, of industrial innovation and automation in general, and Fiscal.AI is just getting started, 5 times sales, I don't really think it's too expensive, especially on a relative basis to a lot of crazy stocks in the market. So this is my valuation model on Ouster. I use the current revenue of 170 million. Again, 170, guys, this is really tiny. I mean, it's not even $1 billion in revenues. So the runways for growth could be insane for the next 10 years, because for me, it's a long-term investment. 35%, I think they could do 40, 45%, to be honest, especially with the new acquisitions, but I'm still using 35%. In total, I would get 3.4 billion in total sales over the next 10 years or revenues. I'm going to take the 3.4 billion, I'm going to time it by 5 times sales, the current multiple. So assuming no multiple expansion, no multiple contraction, I get $17 billion enterprise value. The current enterprise value is not even $1 billion. Maybe after the increase in price, it's like $1 billion. So in total, that's like a 16x, 17x over the next 10 years. And the company could grow 40 or 45% revenues. And if everyone realizes, and the Ouster is an amazing Fiscal.AI bet, and no one's talking about the stock, it could potentially trade at a much higher price than 5 times sales. And I personally believe Ouster, for me, is an amazing pick as a physical LiDAR bet. It's pretty much my only pick for now, but it's again a speculative investment. So for me personally, I keep it a small percentage of my portfolio, meaning under 3%. And if I'm right on Ouster and Ouster goes up 10 or 20x or 17x, then I make a lot of money. But if I'm wrong and something happened and Ouster goes to zero or something happened, then I don't lose too much. So I keep it as an asymmetrical bet where if I'm right, I make a lot of money. If I'm wrong, I don't lose too much. That's how I try to size those positions. I talked about many of them on YouTube. One of them was Mama, which has been a success. It's up 185% over the last year, and it's up 700% over the last 5 years. This is almost going to be 1,000% stock for me from a cost basis of $1.74. And it started as a 1% position, and that's how I play those asymmetrical bets, and that's how I do it. And I'm always looking for such opportunities in my portfolio. If you'd like to join me and find out what I'm buying, what I'm selling, what I'm doing, I share everything I do in real time, and this is the link if you're interested. But thank you very much for watching. Hope you enjoyed the update. Hope you liked it. Hope you got some ideas. If you did enjoy it, let me know. It wasn't financial advice, of course, and I'll talk to you in another video.